This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past couple of days. Firstly, we continue to see volatility in the oil market. The oil price has come under pressure again. The contract for delivery in June has fallen sharply over the last day or so, and that really reflects the underlying questions around supply and demand. Obviously, we continue to see very weak demand, and for US oil particularly, the storage capacity is really quite limited. So we would expect to see volatility in the oil market really until some of those underlying fundamentals are addressed. And it happens in a couple of different ways. Economies gradually reopen and the demand for oil increases. And also we'd expect to see some cuts in supply, either mandated by governments in the case of perhaps OPEC, but also from a market perspective in terms of companies cutting their production or in some cases closing their doors. We've seen the number of rigs operating in the US already fall, and we would expect that to fall further to help bring the oil market back into some sort of balance. Turning to the Eurozone, the debate around how much and how to fund the support packages is still very much an open question, and Eurozone leaders are meeting this week to discuss that. The debate around issuing bonds jointly is still very much in question. We've seen the Dutch and the Germans, broadly speaking, oppose this. Other countries much more in favour, and it's a question that will still be debated, we think. Another proposal has been the issuance of perpetual bonds, bonds that never mature, and that's a proposal that it seems Spain has put forward. So the question of how to fund it and how to fund the support most effectively is a significant one in the Eurozone, particularly as we've seen spreads between different government bonds begin to widen out again. The difference between the cost of Italian debt and the cost of German debt has widened out relatively sharply over the last week or so, and that speaks to the to concerns around the starting level of Italian government debt. And that has perhaps some broader implications for how the Eurozone deals with the crisis and how well it comes through it. Finally, just looking at data, we've seen companies continue to report their first quarter earnings in the US. And broadly speaking, we've seen declines of around 25% year on year. We'd expect to see similarly difficult numbers in the second quarter, and then hopefully signs of improvement, albeit slowly, as these economies, the US and elsewhere, gradually begin to reopen. Interestingly, we've seen quite a positive indicator for German consumer confidence, perhaps reflecting the fact that that economy is gradually beginning to reopen and see signs of some of the restrictions being lifted. Thank you very much for joining us. Look forward to speaking to you again soon.